Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, this week is pretty much action-packed when it comes to central banks. Starting with this week, we've got the US Federal Reserve, we've got the Bank of Japan, we've also got the European Central Bank, the ECB that is, Bank of England, and also the Swiss National Bank. Although it's widely expected to see some changes, maybe in the statement, the Bank of England is actually mixed of possibly seeing a rate hike, where the US is expected to go later next year. Nevertheless, keep an eye on those markets in terms of how the statements, which is mostly important in terms of how the central banks are thinking. Looking at the technical aspect, well, the US dollar, which measures the greenback strength against a basket of 6 major currencies, staged a minor pullback from 96.30 to 96.06. And also from a technical point on the euro, the market is edged higher, but not that much on Friday after the CPI number came out still slightly stronger. Nevertheless, the market was a little bit mixed when it comes to the euro, as it's now breaking down and now still, as I believe, holding towards that bottom side of the range on a broader aspect of a 111, with the current market still capped around this 114 area. After a strong bear session that we've seen over the last couple of months, we can see that the market is attempting to try and break higher. After 3 bullish days breaking out of this channel, got the last couple of days sideways and contained around the level around, that is 71.70. Although we've seen a couple of nudges to the upside, no strong closes were witnessed. I believe the market's finding a supply zone around 71.70 to 72.15. And therefore could see eventually a rejection from that top side. But I would like to see a little bit more of a weaker play, that is towards that bottom side, and then see eventually view the market turn back towards 69 cents. The dollar yen is also contained by that 114 level after a few stabs at the top side, still lacking momentum, especially from the technicals. I'm still in favour of seeing a cap there and eventually see a pullback to 112.65 in the short term and reassess. The pound, since its bullish divergence has kicked in with the hammer in the middle there, has actually staged or supported slightly firmer technicals, and therefore I believe the market is preparing itself for a rally, and therefore a bull run could come back into play to 134 to 135. If it does meet the technical aspects that we do see the Bank of England hike rates, that would also be a little bit of a boost for the market. CAD yen still a little bit soft since the rejection from that trend line around 90. I believe the market's still looking down towards that 87.20 target and reassess. Very weak technicals, so I still feel the cap should continue around that 90 level. A little bit of a mixed play as the market trades sideways for spot gold, but nevertheless holding above that trigger level of 1,757 is the fact that we could see still a short squeeze, but playing in the broader range. I would only step in and possibly see demand in front of that level of 57 and supply to emerge above 1,800. Overall, I am a bear on the broader sense, but look to see any strength could come as an opportunity for the bear case. And wrapping up with all the outside range day to the bear case eventuate, and from the knee-jerk reaction of that midway point could see a little bit more further upward play as the new variant is coming to somewhat a little bit of a shrug off when it comes to market participants, and therefore could see the oil, if it does negate this outside range day, look back towards that 74 to 75 region. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday poll, and I hope you enjoy the great start to the new week.